Welcome back. You're watching us here on Halftime Report. Let's get chatting with the management of another hospital company. Healthcare Global is the one which is on our radar. They reported their numbers as well. We did see an improvement in their occupancy as well as the average revenue per occupied bed to quarter on quarter as well as year on year. So what the outlook is for the period ahead, we have with us the management joining in. The revenues from international business has also improved. PS Ajai Kumar, who's the Executive Chairman of the company, joins us on the big wall, the special Diwali wall that we have. Thanks a lot, Mr. B.S. Ajai Kumar, for joining in. Wish you and your team, your family, all the patients a very happy Diwali and speedy recovery as well from Ekta, me and the entire team. But, you know, we'll talk about the numbers. We'll talk about how occupancies increase and the average revenue per occupied bed as well. But recently there was chatter that, you know, CVC is looking to exit its 60% holding in the company. I just wanted your thoughts. You're smiling here. I know you will say that we don't know much, but tell us a little more. Come on.
You started off with that question. Yes, like any shareholder, obviously, you know, a private equity firm always has an exit, and you know, we have heard you know, rumors about it. There has been discussions among themselves, I'm sure. But the best people to answer that question will be CVC. But I just want to say they have been a great partner, and I know we have grown very well with them, and we'll continue to grow. They have put in a lot of structural things in places now. But regarding their exit, the best people to answer would be them. Okay?
Oh, okay. All right, fair enough. Dr. Ajai Kumar, you know, we've discussed this multiple times with you with CVC's plans. So as of now, you're not aware of what their plans are. So let's talk about the business, because your occupancy has risen to over 60% this quarter. Just wanted to understand what led to this occupancy increase, because a large part of your business is also outpatient, which is basically radiation, chemotherapy, etc. So what led to this occupancy increase, and what are we working with for the next 2 quarters?
One of the things we have to remember is the footfall have been increasing significantly, almost like, you know, 10 to 12% per year. And particularly in our new centers, we are further increasing the footfall. As the footfall increases, even though majority of our care is outpatient, there will be more requirement for inpatient beds. And wisely, we have not expanded and put in more beds. So our occupancy naturally within what we have has increased. In fact, but on the Bangalore, our center has grown so much, so well, we have actually put in extra nearly 40 beds. And so this is a good thing for the growth of HCG. And it also indicates that HCG is becoming a destination. As you can see, our international revenue has increased. With all of this, we see more complicated cases. You know, I trained in MD Anderson, where it is a destination. Similarly, you know, HCG is today a destination. Because of that more complicated cases, we are beginning to see more occupancy in the bed, apart from the footfall itself is increasing.
Okay. So the other thing is, you know, Milan, which is your fertility business, that has been a bit sluggish if you look at the revenues. First half revenue was flat. This quarter revenue was up around 7%. This is at a time where there's a lot of interest within this entire area, which is, you know, mother and child care or fertility issues, etc. Why is it so sluggish, and what's the plan with Milan?
Yeah, you know, post-COVID, we had some time recovering. And then we also had some issues in terms of how we realign ourselves with the doctors. All of that, I'm happy to report, has been sorted out. And we are now recovered from post-COVID. And also, we have taken some operational changes we have made. With all this, we believe this 7% growth is going to go and increase as we move forward. And as you know very well, we have made it very clear. At some point, we are very focused factory approach in oncology, and we would like to divest, and we look at the right time, right valuation to see when we can divest.
Right. You know, the breakup between your mature hospitals and your emerging hospitals. Mature hospitals, obviously, by virtue are growing a lot slower than emerging. But at the same time, mature hospitals have over 20% margins, whereas emerging centers have just around 10%. So I just wanted to understand at what point do the twain meet, at what level do you see overall margins improving and emerging centers contributing to your operational performance?
Yeah, we believe, like we say that our mature centers, particularly our centers in Bangalore, are giving higher 20s in EBITDA margin. And they will continue to grow. Like you said, it won't be that high growth. Whereas our emerging centers will grow very fast. I'm very happy to say our Mumbai centers have grown nearly like 41% growth. And Calcutta center has grown 42%. And Nagpur by almost 60%. So with this growth trajectory continuing, we expect that by about first quarter of next year or so, we will see some break even and beyond break even. When that happens, definitely the margin improvement will happen at a group level, and we hope to reach over 20% at group level, with contribution coming from these emerging markets significantly.
Okay, just quickly leave us with your guidance on average revenue per occupied bed. How much do you expect it to increase to? It's around 42,000 rupees right now.
Yeah, it has been a question asked when we were at 30,000 because of our mix of metro as well as tier 1, tier 2 cities. We have always said the average revenue is a challenge, but I'm very happy to say that it has increased significantly to 42,000. And we are now coming in keeping with most of the multi-speciality hospitals, and being a dedicated oncology center, growth is good, and we will certainly target 50,000 or more in the coming few quarters. May not happen in the next 2 quarters, but certainly we'll be headed towards that.
All right. And you said that you've heard rumors of CVC wanting to exit, etc. as well. But, just wanted to know, if at all they do exit, who do you think would be the right, buyer? Would it be a hospital? Would you look at a strategic investor? Would you look at a financial investor?
If and when that happens, certainly we will be looking at both strategic and long-term partners. For an oncology, in my view, it is my personal view, it is very important to have a long-term partner who looks at a long-term horizon and holds with it, because the growth opportunities are phenomenal. And we are not even touched, certain parts of India like Punjab or Northeast. So with the partner model and the growth we are experiencing, I think the future is phenomenal growth, phenomenal value. And my goal is to create that kind of medical excellence across the country using hub and spoke model. I think we will be able to achieve that with the right people, right partner. And as I said, CVC has been a great partner. And similarly, I think hopefully we'll find a partner who looks at a long term and grows with us.
Okay, all right, Dr. Ajai Kumar, thank you very much for joining in, and wishing you a happy Diwali and more power to you in terms of expansion when it comes to cancer care in India. Thanks very much for joining in and speaking with us. Well, on to some interesting news then. MC Pro's Diwali portfolio that was launched last year has seen a 29.9% return as compared to only 15.3% for the Nifty and around 17.9% for the Nifty 500. After splendid performance in Samvat 2079, you too can dive into Diwali with Money Control Pro's top picks for Samvat 2080. Fresh off last year's success, our experts handpicked these stocks. Explore now only on moneycontrol.com.